Well, hello everyone. This is George Beyrouthi from FS Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. And this is a daily program that I intend to bring to you to bring you up to date with what's going on in the market and how to be successful in trading and investing, and whether it is actually shares, options, or commodities or foreign exchange, or actually any instrument that you wish to trade. So let me see who we are. Let me begin a little bit about what we do. FS Securities offers free daily market reports, trade ideas, full service advisory service, and execution as well. We trade for our clients, which means we are actually a one phone call away. We cover a range of markets including CFDs, commodities, options, foreign exchange, indices, and equities. And we have recently introduced real estate as well for investors, and we also offer term deposit where we offer some very decent return, much better than the banks. So here we got 30 years experience, and we managed all kind of instruments. We mortgage broking firm as well, competitive brokerage and fees. We make certain courses for special needs and wants. We tailor make them especially for the client's needs, and we mentor those clients who actually do the course with us. We have information on our market report, and we put it on the website every morning, and we have daily recommendation as well. Let me begin by telling you a little bit about what I believe this diversification is important. So look, we need to actually understand the characteristic of each client, and we have different strategies for different client. Everybody has got different risk appetite, and therefore when we trade for our clients, we make sure that we understand whether they are investors or traders, and we design the various strategies, and we combine the various strategies, whether it's a low risk, medium risk, or high risk. We can actually proportion the capital that you put with us subject to your risk appetite. Low risk, we have the term deposit, which is giving you 5 to 7% return. That is 5% for 1 year or 7% for 3 years. We also build a portfolio for you, blue chips of course, and hopefully that will return with dividends somewhere between 5 and 7%. And we use the collateral from your capital, from your shares, and we have them to offset the various margins required if you decided to take options and leverage products where we can actually have high return in this particular area. But you need to remember that it is also high risk, and you need to understand the risk and reward ratio before you trade. Okay, well, let me show you a bit about myself. I have been trading for over 35 years, and I must mention that in my early days there were some failures. The reason being because I relied on other clients to help me decide on what to buy and what to sell. I was going into trades without any research, and as I said, relying on other people's opinion. Around 15-20 years ago, I decided to build myself some education, and I've gone to various seminars to listen to the gurus, so to speak, and obviously I also got some very highly qualified education from various universities. The last one from Bond University, where I did my Master of Finance at the age of 65, by the way. So, and by the way, through my journey I decided to design my own mechanical system, the GB8, which I'm about to introduce to you. It's a mechanical system that looks at 8 indicators on 2 time frames. If you are an investor, we start looking at the monthly, and then we look at the daily, and the weekly. And if you are a trader, we look at the weekly, then we look at the daily. So it depends on your risk appetite. We will have different strategies for you, and I'm about to introduce those technical charts that where we get those signals from. But before I do that, let me tell you that because we are licensed, we have to tell you that everything we're going to present to you today and every day on YouTube's, they're all general advice only. And if you want to take it further, you need to consult with us or with your professional advisor. Okay, so when we trade, we need to understand that there is various factors that drives the market. You've got technical, fundamental, and psychological. Technical, as I mentioned, the charts will tell you exactly what to do from the signals that you take out from the technical charts. Of course, we don't ignore the fundamentals, as the fundamentals are also important. And then there are certain elements that brings the greed and fear that we all have. That is a psychological effect that drives the market up or down. So let me start by showing you a chart. This chart, it really shows you that we've got one particular indicator. It is actually the moving average. If you see on the chart that orange line is actually a moving average representing 9 period. Average, you know, you take a number of numbers, you divide them by the number of numbers that you've got, and you have an average. And if that moving average is actually comes from every day you add 1 and you subtract 1. So every 9 days, consecutive 9 days, we have an average and we formulate that particular on a line. Now we have here two separate lines, the orange line that you can see here on the chart and the black line. When the orange line representing the 9-day moving average or the 9-period moving average, because the chart can be daily, weekly or monthly, when it crosses above the black line, we call that a positive crossover, and that indicates that it's likely the market is going to move upward. When the orange line crosses below the black line, we call that a downward trend, and most likely the trend will show you a decline in the price of a stock or the index or whatever you trade. Looking at the next one, we have another indicator. We have the stochastic on the chart. Again, this is another signal. When you see the blue line below the red line, the blue line is the stochastic and the red line is actually the average of the stochastic. And when the blue line is below the red line, we are bearish, meaning that we expect the market to go down. And when it's above the red line, we call that bullish. We expect the market to go higher. And by the way, all these signals are taught in the various courses that we run. And if you, of course, if you're interested to learn more about it and you want to find out more about it, all you have to do is contact us. Okay, we have other signals, just to give you like more or less like an entree to the full course. And as I mentioned, if you want the full menu, then of course you have to join us. Now this is another example here. You can see that if you entered down below when the orange line crossed the black line on the upside, and you actually entered the market in 2003 and you stayed in that market until 2007, there is a big fortune you would have made. So in a trending market, the moving average, which is actually a lagging indicator, can provide you with a tremendous opportunity to make a lot of money, and not only on the way up but also on the way down. So you go in bullish, you trade the market on the upside, and then you get out and you take other positions on the downside and you continue to make money. And of course you need to have the tools to be able to do all of that. We can teach you how to actually look at the tools and understand the signals. I'm going to show you another indicator. Oh, sorry, this is another example on how the stochastic can dictate to you how the trend most likely will move. You take certain position at the entry, and in this particular case, when the blue line have actually crossed that horizontal line and it starts to go downwards, that is actually an exit position. And then when it crosses above the horizontal line, that's another positive position. And between the two lines, depends whether the blue line is above the red line, that's positive, or the blue line below the red line, and that is bearish. The last one I'm going to show you for today is actually what we call the parabolic stop and reverse. If you look at all the dots, if you can see those dots below the candles, these candles, by the way, represents a period. If it's green, it means it's an upward day. In other words, it opened low and finished high. If it's red, it opened high and closed low. And the parabolic stop and reverse are represented by red dots on that graph. And if they happen to be below the candles, we are bullish. When they are above the candles, we are bearish. So I'm going to stop here. Enough for an introduction to you guys. And remember that if you want to be successful in trading, there are three most important things. You need to have the tools, you need to have the education, and you need to have the discipline. And through the program that we run on a regular basis, we can actually help you to be more disciplined. And by the way, we all have greed and fear, different levels, and if we can control the greed and fear, we can actually become a lot more disciplined. And if you want to contact us, you can write directly to me. My email address is george@fssecurities.com.au. Once again, george@fssecurities.com.au, or you can call us directly, 61 for Australia, 7 for Queensland, 56304141. Once again, 61 for the Australian code, 7 is for Queensland, that's the state, and the number is 56304141. And have a fantastic day.